Automated Podcast.
Welcome to Automated. I'm your host, Mark Verbenkov, and in this weekly podcast, we will be exploring the impact of emerging technology on jobs, society, as well as us, with business and technology leaders, researchers, and independent professionals across the world. So as I mentioned in last week's episode, one of the avenues that this podcast has kind of organically started to explore are really the different emerging industries that we are seeing more and more of today. And I think the main reason for this is that not only will they lead to substantial job growth over time, they may actually be a space for the industries that are seeing their jobs being replaced by automation today. So in today's discussion, the virtual economy is introduced for the first time on the podcast. So my guest, Giorgio Tarraf, is the Technology Intelligence Director of L'Atelier BNP Paribas. And he comes on to explain what the virtual economy is, what are the benefits and opportunities it holds for individuals, how it is enabling new forms of work, and what its future might actually look like, as well as many other interesting points. So Giorgio is passionate about how technology transforms our lives. His background in biology, international affairs, social science, and business allows him to explore a broad spectrum of signals to generate actionable foresight. He is most curious about how emerging technology will generate opportunities and solve global challenges, and what that will mean for our futures. He was a great, insightful guest to have on the podcast, and I really hope that you derive as much value from the conversation as I did. Great. Well, Giorgio, thank you very much for coming on to the Automated Podcast. It's great to have you here to talk about the virtual economy, which was kind of an interesting, and I think also a new topic that hasn't come up onto the podcast before. So great. Thanks for coming here today.
Thank you for having me.
Great. So as I like to start off with all of my guests, I really like to hear kind of the personal interest about what the topic is for them, right? So if we can start off that way, like what is your personal interest on the virtual economy? And then of course we'll define what the virtual economy is afterwards.
Sure. I mean, if someone told you that the whole universe right behind a curtain, wouldn't you go and take a look?
Yeah.
That's really kind of how it happened. I heard about the launch of Decentraland, which is this virtual world that didn't even exist in 2017. And they launched this real estate auction for land that didn't even exist. So it was quite fascinating to watch that unfold. I think they raised something like $26 million in a matter of days, where people snapped up these virtual plots of land. And I was like, there's something happening here. There's a real desire, there's a real demand to exist in virtual spaces, to build new experiences, to connect in new ways. And at the other end, there's money in there, right? There's a whole economy being developed around it. These people are going to want to make a return on their investment. So that's kind of where the seed was planted. And then the virtual economy kind of initially started going mainstream, I would say maybe with Pokemon Go, but even before that, with Minecraft, World of Warcraft, people started interacting online differently, developing new identities, buying items. We can talk about it a bit more, but it was more this shift of what we value, how we consume, and how we interact that attracted me to it.
Okay, interesting. Well, I mean, you just gave us a couple examples of what is part of the virtual economy, but
Right.
from what I was reading into, it's significantly more vast. So maybe you could, just so that the audience has a kind of a basic framework, like what exactly is the virtual economy? And then we'll get into some more interesting questions and points.
I don't know if the word exactly would match what I'm going to describe, but the best way to think of it is as a system, right? It's a system of online jobs, assets, marketplaces, but also traders, people who facilitate exchanges that are functioning across a range of online platforms. The most obvious one is gaming. I think it's a good place to start the conversation, but it has gone beyond gaming, where it just kind of tries to encompass the entire human existence. So when you had trading in the games in the 1990s, this is when the economy began, right? As technology got better, you could trade items that became more complex and more expensive. Even in the early 2000s, we had over $1 billion in virtual goods being traded. That was not really seen. It was kind of happening in the background, seen as a niche thing for nerds. But a decade later, we were looking at $7 billion. I don't know if you've heard of Second Life. Second Life is one of the first and most popular virtual worlds, right? It brought the idea to the mainstream. Everyone was talking about it. Second Life was or is the future. And what's interesting is that they had a virtual currency that you could exchange for dollars. And that brought in a lot of entrepreneurial spirit into the platform. People started creating companies that were completely digital, selling digital items and making tens of thousands of dollars a month. And that has grown significantly since then. Like, as I said, World of Warcraft, MMORPGs, they kind of took over the world. They have tens of millions of users. And then people started watching these people play, right? There's now an entire adjacent industry that is called esports that is absolutely massive, right? You have the League of Legends World Championship that has millions of viewers, has the biggest game prizes of any sports. And you have athletes that are now superstars that fill stadiums around the world. You have FedEx, Louis Vuitton, and like other giants that are kind of investing into it. Plus, more recently, we're seeing a great interest in decentralization. So what happened is that all of these closed platforms, they had an avenue to open up, mainly using blockchain technology. Non-fungible tokens or NFTs are a great example of how the virtual economy can start expanding beyond these closed platforms, where publishers cannot control the market anymore. And you have a global market, a real exchange where you can generate value from completely, totally virtual goods and assets. You must have heard of the artwork that sold for $70 million earlier this year. It's just really a JPEG on the blockchain. That's what it really comes down to. But it signals also a shift in the way we find value in virtual items. I think that's a fundamentally new way for us to create money, basically out of thin air.
Yeah, so that's interesting. It also seems like this virtual economy, though it still functions more or less like the real economy that we've been all used to, there would be definitely some kind of differences in terms of how it functions, right? So you're talking about kind of a trustless architecture or decentralized markets. Are there other sorts of aspects that are completely different from the kind of general face-to-face market that we're so common, that we're so used to?
Yeah, I think the main one would be valuation. L'Atelier is part of a banking group, right? So they manage people's wealth and money. And now that people's wealth and money is stored in different ways, not only in cash and traditional stocks or other types of assets, there's a whole part of the human net worth that is currently living in these uncontrolled, largely unregulated spaces. I think that is a fundamental transformation that we have not yet fully adapted to or even understood.
Right. Yeah, that's interesting. You also mentioned like blockchain. Obviously, the internet is fundamental to this space. Are there any other kind of technologies that are kind of pillars in the virtual economy now, but maybe then also emerging technologies that you see would be highly relevant in the next couple of years for the virtual economy?
Yes, absolutely. Actually, there are three types of technologies that are, I think, crucial to make the virtual economy function and happen. The first are technologies that have to enable access, right? You have to enter these worlds. And the obvious ones are the infrastructure technologies. Think the internet, 5G, satellite constellations such as Starlink, and 6G networks that are currently in development. Actually, here we see a very strong signal for the virtual economy because the developers or standard setters for 6G are putting digital twins or virtual reality and augmented reality at the same level of importance in the networks as virtual surgery. Like this is how crucial they see it to the future. And it's important to keep that as a point of focus going forward, to really see those signals and prepare ourselves as a corporation, but also as individuals to make best use of this technology. The second, still within access, you have to talk about identity. I think that's something that is very largely overlooked. If the virtual economy now is going to start becoming a core function of government, of financial institutions, how do we prove that we are who we say we are online, right? And do we have a duty to represent ourselves as real individuals to governments and financial institutions as they enter the space, right? Do we have to be ourselves online? The answer so far has been no. But as things become more and more standardized, more and more taxed, more and more regulated, there's a lot of technology developing around the sense of ID, like the virtual ID. These include biometric technology sometimes, such as vein-based authentication, sub-vocal recognition, and other types of ways to enter the virtual economy. The second type of emerging technology is immersion. Immersion is absolutely crucial, right? Because you need to have access that is smooth and easy. Right now, we can kind of drift in and out of the virtual economy by picking up our phone to buy a virtual item or streaming our lives. We can do it also on a computer, of course. But the lines between the physical and analog are going to be even more blurred as these type of frictions disappear. So VR is an obvious point. We're all familiar with those headsets that have become almost like a household item. But where big tech is looking is augmented reality, because augmented reality kind of is an additional layer to the real world. It doesn't remove you from the real world. This means that it can be consistent, it can grow with it, it can be persistent, whether we are engaging with it or not, it can exist in the background. And this hardware technology could also include things like brain-connected interfaces or brain-computer interfaces, meaning that the machine would kind of understand our mood, what we like and what we don't like, without having to express the desire for it. And it's not science fiction; it's actually under development. We've seen a lot of patents being filed by big tech companies looking at developing these types of AR glasses. And the third and final type, and the one that's closest to the economy aspect of the virtual economy, is of course transactions. We are seeing a very fast trend toward decentralization, but the problem is that blockchain is very user unfriendly. So technologies will enable or allow you to create, own, store, or even exchange virtual assets and goods are going to be a very important aspect of the virtual economy. I think the next Amazon is going to come from there. It's going to be one of those companies that is able to become the infrastructure or the go-to product to allow you to engage with your virtual wealth. It might be a traditional financial player or it might not be. It depends on how and who captures the market and how customers respond to it. So because it is the least user-friendly set of technologies, it is changing very rapidly. And we're seeing NFT marketplaces, smart contracts becoming more and more accessible every day. There's also actual companies and consultants that will help you navigate it. So again, we have this entire ecosystem being created around this transaction-based economy. But my last point is that we focused a lot on technology, but at its core, the virtual economy is very, very human, right? It is still affected by our behaviors, by our priorities, by our desire and willingness to engage with it. And that's something that's sometimes lost in the conversation.
That's interesting. Maybe also then connected to that sense of, human interaction with it. I think when people start thinking of like the virtual economy, it's kind of open to everybody, access friendly, and everybody's more or less on the same playing field when you start, compared to say the real economy, where there's, one of the kind of major trending words for decades now has been inequality, right? We have the 1%, and then you have kind of everybody else. I would assume that when people start thinking about the virtual economy, that doesn't necessarily transfer into the virtual economy. Have you seen that, or is that incorrect? Is there real inequality in the virtual economy right now?
What we found in our research is that the virtual economy can help address some of that generational inequality. Because it is mainly young people entering the space, and because the barriers of entry as an entrepreneur are much lower. If you're building a virtual business, you don't need that capital to invest in hiring employees and paying rent, and you can scale very rapidly. So you see young people that are making tens of thousands or hundreds of thousands of dollars doing these completely new industries, actually inventing their own jobs. And I'm happy to talk about this more in depth, because we often talk about automation as a job removal tool. And the virtual economy can actually come here and bring in a whole new ecosystem of jobs that just didn't exist only a few years ago, or are currently being invented. And they're actually generating real revenue. And the problem here is that financial institutions or banks don't know how to recognize that revenue as income. So you see these young people making all of this money, but the banks don't understand how sustainable that revenue is. So if you go want to get a mortgage and you're a streamer and you made $200,000 in 2020, they're like, okay, you have 200K, but how do we know that this is sustainable income? For them, it's more of a hobby, right? So it's hard for you to grow your business, to get a business loan or to get a mortgage or these kind of long-term planning products. And that is hopefully going to shift as these jobs become more and more commonplace.
That's really interesting. And then maybe more relevantly to the work that you guys do at L'Atelier, can you touch on that, as I think maybe what you're discussing now is highly tied to what is actually being done at your organization.
Um, within the company, we've done a lot of research not only on technology but also on how people interact with this technology, and for example, what kind of jobs are being created. And we've cataloged approximately 20 of the most common jobs. And we find that individually, they take, of course, place online, and they can generate income from a few thousand to millions. So we often think about it as like the gig economy, but it's gone way beyond that. They're actual income, primary income generating jobs. We've spoken to people who have made millions of dollars playing esports. We've talked to a young lady who's buying a house based on her Twitch streaming business. These are real jobs, and we kind of ignore them. But there's more niche jobs that actually generate a lot of money also. For example, farmers. Farmers are people that farm and sell valuable in-game items. And that has actually a geopolitical point here, because people in Venezuela started farming in-game currency in RuneScape. And then they could earn $40 a month in a place where the average wage is $7.50 a month.
Right, right.
So see, it kind of shifts these types of like inequality dynamics by opening up a new market in new localities and in new currencies that allow you to bypass the limitations of the real world.
Yeah, that's really interesting. I first actually heard of mining, and maybe my first interaction with the virtual economy was ages ago, when I had a friend who was actually playing World of Warcraft, and he was telling me about, I believe there were Chinese miners mining gold that would then be able to be sold to the players for actual real currency, and that those Chinese miners were making 5, 10, maybe even sometimes 100 times their normal going rate, or their normal wages in the smaller counties that they were working in China. Yeah, it's very interesting.
Absolutely. And it's, this is a lot of repetitive job that sometimes is done by bots or scripts. But what's fascinating is that we're seeing more high-level jobs enter the virtual economy. Think about digital asset creators. Again, we saw this in Second Life, where people designed shoes and made $1 million a year. But now we're seeing this at a much greater scale, like because you can build entire digital assets for virtual worlds. We're seeing digital architects, digital real estate agents, business consultants, conflict mediators. And we found that some of them earn up to $120,000 a year through direct sales and commission. There's also people who mod games, right? Or who create worlds within worlds. And these also make a lot of money, usually through Patreon donations or other donation-based business models. So this is a diversification of quote unquote labor, and the low barriers of entry is giving a lot of benefits to younger people who are, there's less competition for these jobs, and the years of experience don't really matter. Like you can have 6 months experience, that's fine, because the job has existed for 6 months, right? You don't need to be a 45-year-old, usually white man in order to get to a position of leadership in your enterprise. You can be a 17-year-old, quote unquote nerd, and be a respected business person and generate real revenue and start your career basically in the virtual economy.
So you're talking about barriers to entry. I would assume that, so of course, yes, the barriers to entry are significantly lower, but maybe in another sense, they might be a little bit higher, right? If you're talking about many of the people that are working in the virtual economy, that are creating these jobs in the virtual economy, they would have to be kind of tech savvy, young people, kind of the digital literate generation, if you will. Do you see that as maybe a barrier to entry for, say, people that aren't, like, for instance, like my parents, not very digitally literate, don't necessarily know how to do anything on the internet besides kind of basic internet searches and email? Is that kind of a new barrier to entry in a new economy that's emerging?
In some ways, but you have to remember that as the technology evolves, the user base will expand. As I mentioned, because there is demand and there's money in this field, there's a lot of services that are being built to simplify this process. Every technology experiences a phase where advanced users will have a first mover advantage. It's kind of by design. It's actually kind of good, because the more tech savvy people can build the infrastructure for other people to enter and create this kind of, growth that would be hard to do. If you have too many people entering an immature space, that immature space can collapse. We've seen that with crypto, right? Like
Mm-hmm.
when people rushed to Bitcoin, the blockchain couldn't keep up with the demand and the costs increased and it just kind of crashed.
Yeah.
But as we developed side chains and other technologies that enable a higher volume of transactions, now we're seeing more sustained growth and more sustained economic development. Without going to blockchain, think of the smartphone or think of online banking, right? Online banking also took a long time for people to trust it. Wow, I'm going to see all of my money on a computer screen. Like that's kind of scary and terrifying for someone who was used to wearing a suit to go to the bank every Saturday morning, right? So it's kind of a normal phenomenon. It doesn't scare me. But yes, the virtual economy caters mainly to younger people. But we're seeing strong evidence that it can bridge generational income gaps. And this is what we should be focusing on really. It's like the fact that there's less competition, less demand for years of experience, less demand for traditional degrees. You don't have to get $100,000 of student debt in order to enter these like well-paying jobs. And they cross geographies, as we saw with Venezuela. So like, yes, there are barriers to entry because it's complicated, but there's also many other factors that make it a lot easier and a lot more equal. In some ways.
No. Okay, understood. So you've given us a couple examples of, say, the type of jobs, but also the type of I guess new industries that this is working in, whether esports or otherwise. Do you have maybe an idea of the scope of the virtual economy right now? So either monetarily or the amount of people that are involved, because I think some of the listeners might be thinking like, oh, like this is it's a great new emerging market, but maybe there's only something like 10,000 people that are involved. Do you have some understanding? I know it would probably be difficult to kind of measure, but at least some general idea of what the scope actually is.
So we've spent a lot of time looking at it, and every time we thought we were overestimating, we ended up to be underestimating. It's really hard to overstate how big the market opportunity is, especially with the shift from closed centralized economies to this open global virtual economy. We're now seeing approximately 2.5 billion people interacting with it annually, right? And it's a significant proportion of the global online population. And many times they don't even realize that they're doing it. Right. I think that's why it's so powerful. So the way we were able to estimate revenue is mainly by looking at gaming, because gaming is kind of like a well-established industry and we can know how much people are spending for virtual items and goods. We've also talked to the major platforms that sell NFTs and other decentralized goods, and we're able to come up with an estimate of around $122 billion in revenue in 2019.
Okay.
And this was with an adjustment for region and countries that were not covered with our data sources. And we also accounted for a growing gray and black market, because that's a real problem right now. Because there's no regulation, there are no rules. So we have to. So if you were to make it into like an economy, if that virtual economy was a country, it would be somewhere ahead of Morocco and Ecuador when it comes to GDP.
Right.
Also, looking at the actual wage generation, we believe that the hundreds of thousands of people, it's hard to get a number on that, but we estimate that the real income is around $66 billion, right? Okay. In what we call gross value added. Like that is the values given to people working in this economy. That's equivalent to the total output of a country like Bulgaria.
Right.
So
right.
It's absolutely massive.
Yeah, that's I think that's helpful because as I mentioned before, like if this is the first time that people are coming across the virtual economy as a cohesive understanding, a cohesive idea, maybe they've heard of esports. I'm sure most people have heard of esports, but as far as an entire emerging economy, I think that puts a good, I guess, visual picture on the size of what we're talking about. Yeah.
Yes, I think one way we do have a bias towards the virtual economy is that we see the surface of it. We only see the part that we interact with.
Right.
But behind this virtual digital screen, there are thousands of people. We estimate there's 100,000 people earning money in esports. They're not just the athletes, but there's all the trainers, the staff psychologists, the event organizers, all of the infrastructure that is happening around these teams, the sponsorship teams. There's like a lot of people that you don't really see. Modders, for example, are a huge community. We estimate there's around 100,000 modders. Most of them are earning like little money as supplemental income, but it's still a significant amount of people. Streamers, I mean, we have 50,000 people streaming at least every year, and they're generating a lot of money, some of them up to $1 million per year. So yeah, again, it's really hard to overestimate how big it is.
Right, right. I want to go back to one of the things that you said earlier on. So, as your organization looks at automation and kind of where new jobs are being created, you did mention that this might be one of those sectors that attracts a lot of people that maybe don't have an opportunity for a job in the real world, in the real economy, as automation is chewing up these jobs. Can you maybe touch on that a little bit more? Like, do you see the virtual economy growing significantly over the next, say, 10 years or so? Or will it still be in these more niche markets, even as automation continues to kind of chew up these jobs?
I think we're way past the niche market. Some markets within the virtual economy are
Mhm,
niche, but I wouldn't say that the virtual economy itself is niche. And as we have broader access to the internet, mainly through satellite constellations and new
mhm,
types of
mhm.
infrastructure, the population and growth can only be explosive. There's a lot of underserved populations right now, mainly in countries that are currently in development.
Right.
Um, so through our data research, we found that India, for example, is seeing a massive growth in research in emerging technology. And there's a large part of the population that is not as connected as it could be, and that will be in the next 5 years. So it's hard to imagine that there will not be growth. In fact,
Right,
I think
right,
someone would have to make a very strong argument that it will not grow rather than convince people that it is going to grow. And with decentralization becoming almost the norm, there are no more boundaries to it. There are no more limits. Before we
right.
could say yes, the server size was a limit. Like an MMORPG can only host so many people, but we also have exascale computers now coming onto the market. We have
Mhm.
quantum cloud computing that is also eventually entering the market in the next 10 years. So eventually, we could, in theory, put the entire global population on a single server. So
Right,
where's the upper bounds? Where's the limit? There
right,
is none.
right. You were also mentioning like the geopolitical aspect of the virtual
Mm.
economy before. I would assume that, say, like the United States or maybe other Western democracies would be more open to something like this. Um, do you, in your research that you've done, are there any kind of countries out there that are blocking access or trying to stagnate their population into moving into something like this, or is it that it's still relatively new enough that governments haven't started cracking the regulatory or some form of blocking whip?
Regulation is moving very quickly,
Okay.
especially when it comes to crypto
Yeah. Yeah.
and virtual assets. There's a bit of a blurred line between what is a security and what's an asset, what's a currency, what's a good, what's
Hmm,
it,
hmm.
it kind of becomes more difficult, right? Because money is money, right? But what happens when money is converted into a virtual artwork? Where does that get taxed? Where is it
Right.
captured? So there's a lot of open questions when it comes to that. Some countries are developing their own national solutions, but we're already seeing the EU taking pretty good and pretty strong legislation when it comes to regulating these markets better. Because we have to talk about the dark side of the virtual
Yeah.
economy,
Yeah.
is that it does enable illicit trade. And there are things in there that are potentially not fully legal, either because they're in a legal gray area or simply because they're criminal and not tracked.
Hmm, hmm.
That is definitely a problem. But I don't think the solution is necessarily more regulation at the national level. I think setting standards on an international scale is the solution to address this problem.
Okay. Okay. Um, Maybe we can dive into the dark side of it a little bit because I think that would be interesting for the listeners. Uh, I've talked about crypto a number of times on the podcast before, so I think it's relatively clear that yeah, I mean we had even back when Silk Road was around, selling drugs, guns, and whatever through the platform that would exchange Bitcoin for these sorts of things. Are there other sorts of black market activities within the virtual economy that are kind of apparent for people that are coming across the virtual economy and doing research into it?
Unfortunately, there's a lot of the stolen credit card markets
Mm,
are used to buy virtual goods and be resold to be turned into other types of currencies, into
mhm,
fiat
mhm.
currency. So that's, I think, one of the main ways that is actually unfortunately happening. Game developers are taking actions against it, but it's very difficult to track and identify. But however, there's a lot of international organizations that are designing usually AI driven framework to
Okay.
detect these types of irregular activity or irregular
Mhm, mhm.
transactions. And as don't forget, people think the blockchain is completely anonymous.
No.
Yes, but it's not. It's literally an open, it's an open database that anyone can look into and track every transaction coming and going. So if your name is tied to a wallet, governments and other people are able to identify you and identify every transaction ever made. So there's a bit of a fallacy there that is currently being exploited, but I think that loophole is going to be closed very quickly. In the next 5 years, I think we're going to have a crackdown on this type of activity.
Right.
Yeah.
Interesting. So I'm a big fan of sci-fi, and we talked before we started recording. We both have some of these VR headsets, and I think one of my more enjoyed movies in the last couple of years that came out was Ready Player One, where they had this, as I envision it, kind of the future of the virtual economy, where everybody's just plugged into some virtual world. You're able to hoard money, you're able to transact, you're able to buy things. For me, that was kind of a very visual picture of what a fully scaled out virtual economy might look like in the future. Do you think we'll be moving towards that or some iteration of the Oasis in Ready Player One in the next, 20, 30 years or something like that? Or will we still be how should I say, greatly dependent on the real world economy as we are today?
I would say that you don't have to wait 20 or 30 years. If the question is an economic one, it's what's happening today to many people. A lot of people are now decoupled from the real world economy. In fact, COVID-19 made that evident. When the market was crashing, firms invested in gaming and in virtual reality industries made a 20% profit in March 2020, right? We saw a lot of indicators of people profiting from the shift to digital. So there is a decoupling. What's really great about the virtual economy in some way is that it is shock resistant. It's economic shock resistant. So something that would affect your real world economy, if all of your shops close, all of your systems shut down, you're still able to operate. And in fact, your business might be doing better,
right?
Because you are operating in the spaces where people are spending more time and money into. To go back to your Ready Player One vision, I don't know if, actually, I'm sure actually some of us will in fact choose to remain plugged in 24/7. There's YouTubers right now who will do this experiment and spend like 7 days in VR.
Right.
I don't think that's the right solution. And the problem is that the hardware right now is not very good. I mean, you do get a bit of VR sickness. You can only spend so much time in there before you feel dizzy or unwell. As the technology evolves, I think AR is going to be a lot more persistent. I think in the future, just like a lot of us pick up the phone in the morning, right when we wake up, and it's the last thing we look at when we go to bed, these AR glasses are going to be the same thing. We're just going to become so dependent on them because they can give us a lot of useful information. You look at at something, the temperature of it, you look at a person, their name and number and maybe some notes. It can help you in your job. And these are the types of interactions that are natural, that are simpler. So I don't think we're going to be entering the Oasis. I think the Oasis is going to come to us.
Nice. Yeah.
So I think this is really how it's going to happen. And there's why I think it's going to happen? Because there's a lot of money to be made there.
Yeah.
Right now, we're seeing Porsche, Formula One, Gucci, the North Face, KFC are actually putting all of their budget into entering these spaces. You also see real estate companies right now trying to sell you a virtual version of your, actual real estate. So you are seeing a lot of push in that area, and I think it might succeed. The only thing lacking is the hardware. Once the hardware becomes commonplace, as simple to use as a smartphone, it's going to be inevitable and there will be no going back. Because people who are using these AR or basically augmenting their life with information are going to be at a direct advantage. It's like living today without a smartphone. You are at a disadvantage. You are just going to be a beat behind everyone else.
Right. Yep. That's a really strong argument, I think, for why the virtual economy will grow. Maybe one of the last questions I have here, and you may have already answered it in part, was COVID. So on the podcast, we've of course touched on the impact of COVID on jobs, right? Of digitalization, but also automation has grown substantially over the last year and a half or so. Could you maybe touch a little bit further, if there is anything else to say, based on what you were saying with COVID, specifically how it relates to the virtual economy?
Absolutely. So lockdown, they've really accelerated existing trends towards how much time we spend online. What I
Mhm.
thought would happen in 5 to 10 years happened literally overnight.
Yeah.
And I have like plenty of data basically to back this up. Um, the first one is one I mentioned, right? We talked to investment professionals, and when the Nasdaq was 20% down, the hedge funds that were specialized in
Mm.
these investments made a 5% growth rate in a month. And so I kind of dug a little bit deeper, right? And we found that there was a 15 to 35% increase in engagement and revenue across the gaming industry.
Okay.
Massive industry. So
Yeah.
this is a type of growth that you don't usually see in a relatively mature industry. And there was a 11% growth in spending in June 2020. That is the
Hmm.
highest monthly total ever.
Hmm.
Um, so I'm going to give you some US centric data because I kind of remember them. The Verizon CEO in March 2020 saw a 100% increase in video game internet traffic. Visa, the processing company, saw a 200% increase in gaming spent in April, year on year.
Hmm.
Um, the virtual world Decentraland that I mentioned, they were
Yep.
kind of struggling, honestly, initially with their launch. They couldn't get enough people to engage with. There was like a few dozen people engaging. Suddenly, you have an average of 1,000 people spending time on the platform that's only growing.
Right.
And what's interesting is that this bump appears to be sticky. Like we're over a year in right now, and we're continuing to see this growth and engagement. So people who enter the virtual economy don't tend to leave. They tend to stay
Mm.
and to want to
Mm.
continue to engage. And that's another powerful signal that there will be consistent growth.
Yeah, yeah, that's interesting. I really wonder if, well, I guess now that as countries are starting to get out of these, not full on lockdown, but the restrictions and things, it's the time has been long enough, right? We've been in this for over a year now, so maybe those behaviors that we've been, developing over the last year during quarantine and during these lockdown periods, they've stuck with us. So whether it's Decentraland or esports or whatever, these behaviors are going to be with us for the considerable future now. Yeah, very interesting.
Yes. I would like to make a final point on this.
Yeah.
I'm often when I talk about emerging technology and the virtual economy, the word that I hear is disruption. I'm glad
Mm.
that didn't come up in this conversation, but I just wanted to bring it up for people who are listening because there's a lot of fear. There's a kind of a fear-based mindset over like the virtual economy automation is coming for your job and for your industry. What is sometimes not brought up is that disruption is always an opportunity in disguise. And the key to this transformation is having one, foresight, and two, a more agile mindset. So if you prepare your business to pivot, you can
Mm.
catch the rising tide. And I actually saw that in real time, right? Because we had been working on NFTs way before the bubble, we saw people make a lot of money just because they positioned themselves strategically with very little investment, but lots of foresight
Mm-hmm.
to generate a lot of profit very quickly when everyone else was losing jobs. So sometimes trust your instinct and do look into the future, not with fear, but hopefully with hope.
Yeah.
I know it's a bit of a philosophical answer, but that mindset has actually made people millions of dollars. So I thought it might be useful information to
I think
people
it's
listening.
very relevant when you can attach hope to a dollar figure, right? It makes it much more realistic. Um, Great. Well, yeah, I think that's a great way to end the discussion here. That's also one of the things that I like to do on the podcast, right? It's always to ask like, what's the next 10 years, or in this case, 20 years or so coming ahead, to kind of give people a bit of a sense of what one specific technology, or in this case, a specific industry might look like. So yeah, Giorgio, thank you very much for coming onto the podcast. I'll have of course, your LinkedIn and the website of L'Atelier on the show notes. Are there any other ways that you want people to get a hold of you?
Yes, I do write a weekly newsletter on emerging technology. It's
Great.
called T plus 10.
Okay.
And you can sign up by going to atelier.net and subscribing to the English version of the newsletter. We also publish a French newsletter, which is a completely different product, but that I also highly recommend. That's written by our senior researcher within my team.
Terrific. Well, I didn't know that before, so I will immediately after this is done, I'll sign up to the newsletter. Great. Well, as I said, thank you very much for coming on. It's been really interesting hearing about kind of an emerging, or I guess you could even say in some cases, maturing ecosystem and economy. Thank you very much for coming on, and yeah, we'll be in touch.
Thank you, Mark. Bye.
Well, that's it for this week's episode. Thanks for listening. If you like what you hear and you want to support the podcast and the conversations here, the best way to do this is to go onto Apple Podcasts and leave a review, as it helps the algorithm to reach out to new listeners and brings the show to them. Also, feel free to check out the website, automatedpodcast.org, where you can find the show notes for each episode, written articles on the themes of the podcast, and a library of resources on the topic of emerging tech and automation. Also, if you want to reach out and leave any feedback or you have any questions about the podcast or any of the conversations, there are general contact links such as email, LinkedIn, Twitter, etc. for you there on the website. And finally, for those of you that want more than just an audio conversation, the video recordings are now going to be up on YouTube for the newer conversations, so feel free to check out the videos by searching for Automated Podcast on YouTube, where of course you can like and subscribe if you prefer to support the podcast that way.
The Automated Podcast.